It's actually not difficult to see what TAUSDT is trying to do here. It took me a long time to even find a setup that is profitable, a setup that is high probability today. And even with this one, I still have my heart in my mouth. And I'm going to point out a few things that I am looking at here, considering liquidity and price delivery. Okay, I'm actually going to show you my thought process for this TAUSDT trade. So stick around. If this is your first time in my channel, please, I'm begging you to subscribe. Okay, I'm begging you to subscribe. I deliver quality content and I'll break down price action to you, how you understand it. All right, the best way you can understand liquidity and inversion fair value gaps and use it as an advantage when you are trading. So we are looking at TAUSDT, and as you can see, we don't have much going on in terms of price action. It's basically price action from Monday, July 21. Is this a new contract? Monday, July 21, and today is Tuesday, July 22. Wow, I thought this pair has been around for a while. So, be that as it may, the thing about liquidity is that price goes for old highs and old lows and imbalances in form of gaps and relative equal highs and lows. So when I talk about gaps, I mean fair value gaps or inversion fair value gap. That's what gaps is all about. So what is a gap? A gap is actually when you are looking at three candles that are close to each other. So let me get my demonstration too. When you consider this candle with this long red candle with this long white candle or green candle, you will notice that there is only sell delivery. I mean, there is a sell side imbalance and buy side inefficiency, because the price delivery to the buy side is actually inefficient. As you can see, there was no delivery of a week to balance this sell side. So this is a liquidity void. Okay, it is a gap in the market that needs to be actually filled up. All right, so it's a liquidity void, this one right here. All right, so when you are trading or when you are trying to frame your take profit or your stop loss, your eyes should be looking for these imbalances, because they are the point in price that is likely to magnet price. It will make price to gravitate back to that level. This this fair value gap right here. So what we have as our fair value gap is the low of this candle. Let me actually use this to mark. No, let me delete this, no confusions yet. So the fair value gap is the low of this candle. So let me call this the fair value gap low. Fair value gap low. Then I will just click and drag. Fair value gap high. So what is the idea? The idea is just bearing in mind that this gap in the market has to be actually rebalanced. Okay, this gap needs buy side delivery into it, and when we are framing this trade, we are framing it with the mindset that price is actually going to retrace back into this level or this point in liquidity. All right, this whole low to this high is a liquidity void. So someone that is actually trading or looking to take profits may start taking profits from this high or this high. I'll tell you why this high is a probable place to take profit. All right, this is a relative equal high. In essence, this high is higher than this one. Okay, so let me quickly remove this one so that I don't make things cloggy. So I will take this high right here. Guys, this dotted line that you are seeing here is actually yesterday's closing price. So if you want to have this blue dotted line on your chart, you can right click on your anywhere on your screen, click on settings, and on the scale and lines, scroll down, you will see the previous day close. The previous day close is actually a very, very, very nice liquidity pool. All right, it is like a magnetic liquidity pool, and you have to learn how to frame your bias in context to align with the previous day close. So I use it a lot. I use it a lot. So, but that will be a topic for another day. I just wanted to like show you how I framed this inversion fair value gap trade. So let me quickly drop to the 15 minutes and point out this point in price. So let me call this a relative equal high. So this high is actually a weak high. Okay, it is like an open high. It's literally asking price to come and take it out. So I want you to observe this leg that took out this relative equal low, or this leg that took out this liquidity. So let me say sweep of liquidity, liquidity. I like to see my inversion fair value gap come inside the leg that swept a major liquidity pool.